The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we kicked off what will no doubt be a very busy, headline-driven, potentially volatile week in the markets on Monday, we got it rolling with USDA's March 31st Prospective Plantings Report and the quarterly grain stocks, which, for the most part, the grain stocks, not a lot of surprises, I would say, but that Prospective Plantings number saw corn acreage come in above 95 million. We're going to break this all down, talk about things. What did we see with the reports and the market reaction on Monday? Joining us for our USDA Roundtable discussion, John Heinberg with Total Farm Marketing and Kristi Ahn-Kjeseth with Van Ahn and Company. John, Kristi, thanks for being with us here today on the show. A eventful day, I would say. It always is when we get to the March reports. Let's not waste time. Let's get just initial reactions real quick. John, I'll go to you first. Your take on that higher acreage number than pre-report estimates for corn and just everything we saw unfold on Monday.
Yeah, pretty much came as I was kind of leaning in my mind. My bias was higher off of that analyst expectations, 90, 94.5, 94.6, that type of number. So I wasn't surprised by that number today. I was hearing whispers of 96 million out there, and that did seem a little rich, but not surprised. We're between that 95, 96 window. Soybeans, again, really didn't see a lot of that big drop. Remember, we're down, but obviously 83.5 million area. It's kind of as the market was anticipating in that regard. So, and then grain stocks really didn't get a whole lot of anything there today in terms of the numbers. It's not very often you see the corn analyst number come in point for point with the actual USDA findings today, especially when you got a variability of a feed usage number out there. So, but to me, the report came in as I kind of thought it would for the most part today. Now we'll see what the reaction is as we get through the rest of the week.
Absolutely. Kristi, your initial thoughts on what we saw for Monday?
Yeah, I thought, you saw that corn acre number and you were kind of like, oh crap. And the market did a really good job shaking it up. So I would say the real winner out of today was probably corn, being able to ignore that number because that is a very large number. I would agree with the fact that I think soybeans were disappointing on the fact that I thought you would have seen them lower than you did, right? If you're going to go and jump corn like that. But wheat was the one that really took it lower. I still think you could see bean acres possibly go lower. Just that's all dependent on spring weather. And we're seeing a lot of moisture in these areas all of a sudden. And before you know it, I think that's going to be the market's attention. But overall, I think the job was done. It was a very boring report. Not very often we get these March 31st or the June reports that are boring. So every once in a while, I'll take them. But I think the market is kind of coiling here that I'm just afraid when it does want to move, it's going to move aggressively in one direction. It's just which one is that first.
Well, shout out to Karen Braun from Reuters. I'm going to use her charts on the video feed. Thank her for the permission to go through these on our roundtable here today and, well, anytime. I appreciate the work she does. She got these out really quick. And we're going to go through acres and more. I'd like to ask both of you, when you look at these numbers, I guess I wasn't overly surprised at where these came in at, but as you start to break them down state by state, I know there's some notes that if realized, the planted area of corn in North Dakota, South Dakota, Oregon, Nevada, Idaho would be the largest on record. The Dakotas definitely stand out to me there. I guess when you really break these down more, how does this all play out moving forward, John? You brought up weather. Kristi did too. This is kind of, I guess, we set the goalpost, right, at this point?
Yeah, very much so. That's what this report does now. Basically sets the goalpost in terms of what we're going to see on the May report. We can get those first numbers for 25, 26, as well as, how the pace goes over for spring planting. Again, you saw those jumps in numbers. Obviously, the Northwestern Plains was where an area from talking to people up in there had a hunch that was coming. Some of that came out of spring wheat. As you look at the spring wheat numbers, down about 500,000 acres 500,000 acres from last year. And I was talking to producers in that region. they just can't pencil spring wheat, and they're kind of sick of fighting all the quality issues and docs they've been getting. And corn was penciling in the time frame the survey was put together. So I'm not surprised to see that happen. Now we got to watch the weather up in that area and see how that goes. Obviously, very dry in some of those regions right now. Need to see some moisture come through. We'll see if they get those things. Talking to a few producers, they're very, very concerned. So we'll have to continue to watch that play forward. So I'm not surprised to see that jump there. And also on the percentage level, big jump in the southern states, Texas as well, adding 14% more corn acres. We saw cotton acres down about 1.3 million. I think that was something that came into play, from some of the from where we were last year, just because of the cotton price. Wouldn't be surprised we saw some good corn acres move into those areas, because that was some of the chatter I was hearing, was corn was going to replace cotton in some of those southern states.
Kristi, you work with a lot of producers up in the Dakotas. You're up there kind of western Minnesota. I mean, to John's point, are you hearing some of those same things? I mean, especially look at that spring wheat number. It seems like a lot of acres going out of spring wheat to corn, which I think many of us have kind of heard the whispers about that. What would you agree, Kristi?
Oh, definitely. I just think corn is king in so many areas. But the difference is, when you look at the Dakotas, their ability to grow a really good corn crop has just grown tremendously in the last 3 to 5 years. And so that alone just makes the ability for them. I mean, you think back a couple of years, you had record yields for spring wheat on so many farmers, and they still couldn't make money on it because of all the discounts, because of the quality issues like John was talking about. And that is just so defeating. And so I think corn is just a very consistent one. Obviously with the Dakotas, you're playing and flirting with, having some dry. Is it going to be dry at the end? Or are you going to make those frost dates? But so far it's worked out for these guys, and I think they're willing to take that chance again. I'm also curious, are you going to see those areas pick up on some more corn acres? There's a lot of edible beans throughout the Dakotas, and I wonder, are you going to see that go to canola? Are you going to see that go to corn in some of those areas, just with the uncertainties of tariffs? So I think there's a lot of questions out there, but I do think that corn acres have been king. Every meeting that I've done this stretch so far this year, I have not had one person say that they are going to plant more soybeans than they did the year prior. Part of that has to do with rotational bias, but also it just has to do with profitability, right? You're looking at these numbers, and corn is the one. And a lot of people still, that profitability isn't even there for corn off average yield. So they're going to take that chance and see if they can't get a little bit of a better yield, and try and go after that. And you talk about how dry it is in the Dakotas. Throughout parts of Minnesota, it is very dry. We have had some moisture here over the last little bit, but nothing massive by any means, and still too early to be beneficial. But I think, once again, those dry conditions, even though they are concerning for farmers, they're going to bring the option for more corn acres, I think, in the long run.
Well, we mentioned grain stocks, how there weren't really any surprises there. One more chart we'll look at from Karen Braun on our video feed. I mean, John, you pointed it out, that corn number exactly with pre-report estimates. The soy number and the wheat numbers were a little bit higher. I guess my question for both of you, John, I'll start with you. I still feel like when we figure all this into the balance sheets and more, that, I mean, this still doesn't feel like it's very, cushy to me. Like, I feel like if we have a production problem of any kind, we could still be fairly tight with some of these numbers, can't we, John?
Yeah, definitely on the corn front. I mean, the market's anticipating and probably needs to be some bushels moved off of the carryout pile into the demand side, especially on the export numbers. We saw that export inspections number today was just another stellar number as they're continuing to move those bushels out. Even with that 95.4 million acres as a potential planting number out there, that, don't forget, we're calculating things at trendline yield at 181. That, we didn't even make that this year with the type of weather that we have. So there's immediately taking 200-300 million bushels off the pile for anything underneath trendline yields. And that's just going to tighten up that fall number in terms of the carryout even more so. Plus, again, right now U.S. is the best game in town in terms of corn demand. We got some questions maybe about that Brazil crop, plus Brazil's just tight on corn right now. So there's just some things coming forward here that could keep the corn market at least happy. And if we get any weather whatsoever, I think you're going to see some very big volatility kick into this market very quickly because of concerns in that regard. So that could set us up for a pretty interesting summer from the market movement side. Soybeans, still a little bit different story in my mind there. That 83.5, if you ask it, it's probably still a little bit too heavy given the global supply of beans that are still out there and the demand concerns. We've moved beans well, but that's slowing down here very, very quickly as those Brazil beans have been hitting the market. But again, still, if we're off on our production or we got a dry summer or something along those lines that could cut into it, what could be a 400 million bushel carryover turns into 250 pretty quickly, and that could give us some volatility in price. So with that in your marketing plans, make sure you keep that balance of it available in front of you as we go towards some of those summer months.
Kristi, your thoughts on the grain stocks numbers?
Yeah, first of all, what caught me off guard was that we chewed through the most corn we have in that first quarter in history, or like I should say the recent history, but I think it's probably history when you look at it. And so I thought that was really impressive. One thing that deflated my sale a little bit is I was like, okay, if we can keep demand similar to what we had last year the rest of the year, what does that give us? And that gives us like a 1.5 right where we are. I was hoping for something like 1.2 to give us a little bit more of a oomph behind it. But overall, when you look at it, I thought that stocks number, there was nothing to write home about except for the fact that it confirmed that we have been doing a really good job using corn. And so if you come in here and you start to pencil some things, I think one of the optimistic things you look at corn is that let's say USDA does not choose to adjust old crop corn over the April and May timeframe because they're just concerned about what we could see global, throughout the global pipeline, throughout tariffs. So you keep it out of 1.5. You put this large acre number on there on a large carry or a large trend line yield that we weren't able to get. Like John said, that gives us a 2-1 carryout. We can deal with that, right? If we think about where we were last year, you started to hear people say 3 billion bushel carryout is what we could potentially be seeing. And so this is something we can work with and we can chew through. And I think that's why the market had a decent reaction to such a high acre number. On soybeans, you can just separate those two. There are such different stories right now. The global situation in soybeans, we have so many soybeans around. You take China out of the equation for corn. We have very tight situation domestically and worldwide for corn. So I just think you can kind of separate them out. But when everything seems to be put together, they seem to be tethered together that they don't want to move anywhere without a real story. Maybe we'll get that this week. Maybe we won't get that until we get closer to planting. But it seems like they're stuck here. But I do think when you look at the big picture here, it's nothing overly very threatening to me at this point. That does not mean this market has to run, but I'm not worried right now, so to say, even with that large corn acre number.
Kristi Van Ahn-Kjeseth with Van Ahn & Company, John Heinberg with Total Farm Marketing joining us for our USDA Roundtable here today. All right, I want to get some risk management thoughts from both of you, and this is where I will bring in the unknowns ahead of us yet this week with tariffs and more, and a lot of headline risk, I think, in front of these markets. But now that we have some certainty, at least with these USDA numbers, what do folks need to be thinking about when it comes to risk management in the grain trade? John, I'll start with you.
Obviously, we still got to keep concerns, especially on the corn side, of just, we still got some decent value, not liking where we are right now, but, make sure we got some floors put together here just in case. I'm more worried about the money flow. And as Kristi just mentioned too, we got the tariffs things coming up here on Wednesday. The funds have bailed off this long position. They've actually just got out of the market. I mean, they've shaved almost 170,000 positions out, not just longs, nets, and shorts. So they've gone into the sidelines. Maybe it was to handle some things in the equity markets with the sell-off there. But at the same time, where are they going to go? Okay. Is there a number that's bullish enough here to make them pour into the long side of the market with all the uncertainty? That makes me a little nervous that, they just keep pressuring this thing down to a spring low. But then that's going to be your opportunity. That's going to be a spot where if you've made some sales, you get the re-ownership on top. If you got some puts in, we just kind of manage those a little bit more, because again, we're looking at two stories here that we could very easily come together and be 2 billion plus bushels next fall and 350 corn at harvest, or 1.5 billion bushels next fall and $450 or $455 at harvest. So balance is going to be the biggest key in terms of the marketplace. Soybeans, on the other hand, that one's still just tough for me to handle. You just got the numbers that are out there. Saw some stats over the weekend that Brazilian farmers only 50% sold right now. They're sitting on 85 million metric tons of soybeans that still needs to hit the marketplace due to the low corn crop last year, the tighter bean supply. They had some more storage, and some of these guys stuck it in the bin or stuck it in the bag, waiting for the market to pay for it. Now those beans are going to start coming out. I think that's why we saw the negative reaction today in terms of the soybean market, plus obviously the tariff concerns that right now this bean market may have to go find a low. Then I think it's going to be cheap enough that we do want to own it, because again, summer weather, those types of things can be such a factor. Or if we get the tariff things out of the way, we could see the business pick back up. But I'm a little concerned about that bean market, definitely here in the short term.
Kristi, your thoughts when it comes to risk management now post USDA reports?
Yeah, I'm very similar. I would say that I desperately want some bean calls on at some point, but it has not given us a reason to at this point. And so what we're waiting for is either obviously like that breakdown. If we could get to about 980 off November beans, we would look at it. Otherwise, a breakout above this like 1040 range, 1050 range on soybeans, on no beans. If we could get really consistently above that, I'd maybe look at some calls. But I will say that's one of my top priorities, is to get some bean calls on, just because I do think guys are going to want, once again, the beans out the door right at harvest, and to make room for the abundance of corn that I think so many guys are planting. And so I think they're going to want to look at that. As far as it goes for, the corn side of things, we've really just been kind of rolling down puts along the way, and just trying to, take the 10 cents if you have it and just take that risk off, because we do feel like eventually corn will have that opportunity to get back above its insurance levels. It has consistently done that, and I'm not sure why it wouldn't this year, just kind of given the dynamic. But I would say one thing is try not to get too bullish off of weather. There's a lot of people talking about weather right now, and I feel like that's a little bit early. I've been talking about weather, so it's not like I'm calling somebody out. I just think that so many people are just showing some hot and dry maps. You have people talking about it. Do not let that sway you from your marketing plans. You can defend off sales with calls if you want to, or even futures, depending on your risk tolerance. So really stick to your marketing plan. Just remember the seasonal tendencies, right? This end of May into June timeframe. Really pencil that in to say, hey, I want to get some marketing done during this timeframe. Let's see how the rest of the year goes, but at least be doing something during those periods.
And of course, the risk of trading futures and options can be substantial. We always want to add that caveat in. This has been fun, guys. Yeah, you bet. Before we go, real quick, I can't forget about our livestock producers. We should at least mention the livestock trade from Monday. Cattle futures a bit lower. Hogs were mixed. Notes from either of you in the protein sector. John, anything you saw there Monday?
Well, we still think we're losing a little bit of upward momentum now, talking to some of my South Dakota guys too in cash trade. They were down a couple bucks last week. We saw retail soften at the end of the week. Now, I'm not saying the market's going to roll over, but it wouldn't shock me. We get some technical selling in here, especially if that was the trend in the short term. But I do think there's still going to be opportunity down the road. So I'm keeping my puts in front of me here for the April-June window, just in case. Again, we've got a lot of things going outside the markets that could be a factor here. Maybe you haven't seen the export sales in the last 2 weeks. China's basically said we're done with buying US beef. You can just see that. So we'll have to see if that trend even continues here at the same time. So I'm a little cautious of that cattle market right now, but I think it rolls into an opportunity to get some length back in, especially if you made some sales out on some of those deferred contracts in terms of hedging up your cattle, or even locking in some of those prices, which some of my producers have done. Locking in $2 cattle for December and be sitting back for the whole summer. It was a pretty good plan in terms of profitability. So hog market, that one's a tough one. It's just basically moving sideways, but it is volatile right now. And just, we'll have a good $2 update and then boom, right back the next day. And you draw a line through the middle of it. We're basically in the same area we've been for a month now. So just kind of watching what that market wants to do going forward. Feels like summer hogs are cheap here in the low 90s. But, especially with some of the numbers and things that we saw with the quarterly hogs and pigs going forward. But so I'm just kind of being patient at this time frame, looking for an opportunity to step in some of those summer hogs or get some ownership over hogs that guys may have already put on the market.
Kristi, any notes for you in the protein sector today?
Yeah, very similar. I think hogs are tied to a degree when you look at soybeans just kind of consolidating here and waiting on any tariff talks. So I think that affects the hogs much more than it does the cattle. As far as it goes for cattle, I'm waiting for some sort of sign that you see like some solid retracement in cash. Otherwise, until then, it seems to just be kind of floating around here. I think that if you have not added puts on in your account, if you have a trading account, that's seriously worth a conversation just because of the price level that it's at and just because of the investment you have into these animals. It's insane to me, just the risk that's on the table. I mean, it's one thing to talk about the risk that you have for, your grain guys, but like the cattle guys right now, that is so much. So I do think that's important to really talk about that risk and covering up some. You can easily do that without some limitations if you really want to. So I think that's key, but I'll be watching cash for the cattle and tariffs for the hogs.
I appreciate the insight and perspective from both of you. It was definitely a busy day Monday. We'll have to see what the rest of the week brings us. With that, we'll wrap it up. John Heinberg, Total Farm Marketing. John, always good to talk with you, my friend. Thanks for being here.
Thank you. Have a great week.
And Kristi Van Ahn-Kjeseth with Van Ahn & Company. Thank you as well, Kristi. We'll talk to you again real soon.
Yeah, thank you.
That's going to do it for our USDA Roundtable for Monday, March 31st. I'm Jesse Allen. Have a great rest of your day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.